I hit start on the recording. Essentially, this this live session, I want to go over kind of order blocks and why order blocks are failing, and why a lot of people that fall under the kind of dumb smart money get caught out, right? Like, for example, someone came to me at the CoinW event, right? And they were like, "Yeah, no, I'm keen to learn about smart money." And I was like, "Yeah, it's a great strategy to learn. I back it, fully back it." And then they were like, "Yeah, but the thing that I've been trading off of has been these order blocks, right?" And essentially, what happened was the guy drew out on a piece of paper. He said, "Yeah, why do you use a doji candle as your order block? I watch other people's videos and they use the wicks, right?" And I was kind of like looking at him funny, because I was like, "Yeah, like order blocks and supply and demand levels are completely different, right? Like if you're trading the smart money strategy and you're just trading order blocks, that you're going to fail every single time. The same way that if you're trading the smart money concepts and you're only trading supply and demand, you're going to fail every single time. Like the smart money strategy is not only the order block supply demand strategy. It's got to do with market structure. That's the most important thing to understand. Is the market will always move with a reason. There'll always be a reason why the market will move in a certain direction. It won't just move, right? But after saying that, you have to also understand that lower levels of liquidity, or not liquidity, lower levels of volume opens the market up to more, it opens it up to more manipulation, right? So 9 times out of 10, when you're trading, and you're trading a market, like for example on a Friday, right? A lot of the banks start closing, right? And then it opens the market up to more manipulation, right? The same thing with crypto, right? When you're trading crypto on the weekends, it's lower volume. So it becomes easier to manipulate price in one direction versus another. And it's something I just want to go over today, is understanding, understanding market structure, but on a deeper level, understanding that market will move not against you, but for a reason. The market will always move for a reason, right? So in this example, what I'm going to do is I'm going to pull up some charts, and we're just going to go over understanding the basics of market structure. If you guys could see me right now, I've literally got some sweatpants on, got a thick hoodie, like a fleece hoodie, and I've got a gown on as well. It's freaking freezing over here. So let me open up another chart here. I assume everyone can see my screen. Yeah, you can. I am recording. Let me just double check. I am recording, yes. So essentially, let me bring up the S&P 500, and then let us go over some things. Okay. So my computer's a little bit slow. I don't know why. My mouse is a little bit laggy. Okay. So essentially, we all know that the market makes moves like this, right? High highs, lower highs. Sorry, high highs and high lows in an uptrend, right? Where you see the market continuously then breaking structure to the upside. Okay. Now, what I'm going to do here is I'm going to show you that this over here, right? If this is what the chart looks like on the 3 daily, right? You got the 3 daily looks like this, and you zoom into like this section over here, right? Even though your 3 daily might be bullish, if you zoom into the chart too closely, you'll find that you're actually going to be looking at a downtrending market on the 1 hour, right? Obviously, everyone knows this, right? So if you're looking at this area here, that's what it would look like on the 1 hour. Okay, let me just move this over like this. But then you have this on the 1 hour, but then conversely, if you zoom into, say, this area here on the 1 hour, let's say that's what it looks like. But if you zoom into this on the 5 minutes, right, you'll find an uptrend. Right, and this is the thing that people get wrong in the smart money trading, is that they neglect all time frames except the one that they're trying to trade on. right? So for example, here we've got the 3 daily giving us a bullish momentum, then you've got the 1 hour giving us bearish momentum, and the 5 minute giving us bullish momentum, right? So at the end of the day, what happens is guys will then try to take an order to go long off of an order block that looks valid on this time frame. But a demand zone that looks very valid on one time frame, and all of a sudden it drops their zone, and they start questioning themselves, why did my zone fail? You know, this demand zone then turns into supply, right, forcing the market down. And then people end up saying like, oh no, but smart money doesn't work, smart money doesn't work. And it's like, no, it does if you start understanding it to what it is, right? Understanding smart money is not just trading it on the 5 minute, right? Smart money concepts is not taking a chart on the 2 minute and trading on the 2 minute, right? It's taking a chart on every single time frame and deducing what direction price will go in, right? So let's just go and grab up a random chart here. Let's go and let's do Euro USD. Actually, let's do USD JPY. I will be using Forex pairs in this example here, but it works the same on crypto. Forex pairs is just going to give me the best examples, because I know in crypto I'll have to go and look for it, because look what Bitcoin's like really not doing much. Go to the 4 hour on Bitcoin. Bitcoin's not really doing much. I can't use this as an example. So let's go and have a look on the daily on USD JPY, right? So I'm going to do like this as an activity with you guys, because I want you guys to help me chart this out, because it's not only important to understand the market direction so that you can confirm a bias of which way you should be trading, but it's also good to understand what time frames you should be looking at, right? Like I don't think this chart has any drawings on it. If it does, no, it's got 0 drawings. It's got 0 markups on this chart, so this is a fresh new chart. And I want you guys to help me deduce what's going on here, okay? So what do we see, right? On the 1 daily right now, I'm going to zoom out to this level here. What do we see? Is it uptrending or downtrending? Should we look for sells or should we look for longs? Thanks, Waz. Appreciate it. Now, like, I was thinking about like skipping the session. Then I was like, you know what? I can just do it like a little bit slower. It's not really that big of a deal. Oil has a 4 hour structure in play. I want to do oil as well after we do USD JPY. So up looking for longs, generally uptrending. Okay, so on the daily you say it's generally uptrending, right? So let's take a look. Let's go and see why. Okay, so let's go and see why we say that this is uptrending. So on the daily time frame, you can see we're constantly over here, right? You're making higher highs, right? You're constantly breaking highs on the daily. Over like that, right? So you can say, yes, this is an uptrend. That's an uptrend. Then you have this area here, right? Now this is where it gets interesting. It's because this over here, you could mark off as a change of character to the downside. Right, you could mark this off as a change of character to the downside, and you could say that this market might start reversing to the downside, right? Now, this is where it gets a bit tricky, is that if I take my fib top to bottom of this move from point A to point B, I want to look for the possible reversal points, right? So we know that on the daily, this over here is uptrending, right? So I would look for longs in this area over here, because we are uptrending. My premium area for selling on the fib level would be here, and that marks off with this order block right there on the daily as well, that area there. So under this bias on the daily right now, I can say, okay, I'm looking for sells once we get to this level up top here, right? But even once I have a daily time frame bias, I would always go and check the 3 daily just to see if anything else matches and zoom out really nicely to see where we're coming from. Right? So now all of a sudden this change of character to the downside doesn't look that strong of a move compared to where we've come from. Right? So yes, the bias for this short, right? So let's say I'm going back to the daily. So yes, the bias for the short is still there. I would still look for sells in that area. I just wouldn't go in and take a limit order on that. Like I was telling the guys a while ago, in one of the sessions, I was saying, I don't set a limit order. I don't set an alert and then take a trade straight off of my alert, right? So a lot of the times people tell you, yeah, no, like, so that's your selling zone. Set an alert over there. Then once your alert hits, you can go in and then take the order. I never do that. I never set limit orders because I always want to watch to see how price reacts in that area, right? It's important to me to look at those types of things, right? So after saying that, right, let's move forward into the next step of what we need to do, okay? So daily time frame, uptrend, okay? Why do we know this? Because we have a change of character over here. And we break highs over here, okay? So now you're sitting in a situation where you have a change of character over here. But then you then reverse up to then start making higher highs again. Right? So now it becomes tricky because your bias should be short because you got to change your character, but now you're making higher highs again. Okay. So let's look at this in a different way, right? So we now know that we took this low out over there. It's currently uptrending on the daily. So therefore, this bias over here, as of now, as of what's happening here, we should be looking for longs. Okay, because we can see over here, let's zoom in a little bit more. You can see over here that we're constantly building up liquidity to the downside. But until we want to go and take that out, we need to still be looking for longs. Like you can see over here, you can see there's also liquidity. We've got tons of liquidity buildups, right? But you can see this market's busy uptrending in a manner that it's starting to build that liquidity, and eventually it's going to then come down and take it. But until that happens, we still got to have to look for longs. Okay, but onto the 4-hour time frame, you can then start to zoom in onto zones, 1 hour, and go closer and closer and closer down. But now do you see how I already have a higher time frame bias of what's happening? When I'm on the 1 hour, 30 minutes, 15 minutes, I know what's going on, right? So let's take a look over here on the 30 minutes, okay? Actually, let's go to the 1 hour first. A lot of people, or a lot of the dumb smart money, would mark off this as your change of character here. And then they would draw their fib top to bottom. And they would go for a short right here where we are now. Targeting the most recent low. Okay. The only problem I have with that, their order block would be somewhere here. Right, the only problem I have with that is that if I zoom out back again to the daily, is you're looking for a short in an uptrending market. Right, you're looking for a short when your daily candles are looking like this. Look how strong these candles are on the daily. That's a very big push. That's a decent push over there as well. Right, I'm not now, the thing that I'm saying here is that I'm not telling you that this market's going to keep going up. I'm just telling you that if this zone fails, it's because I was trying to look for shorts in a market that was trying to go long. Right? So after saying that, I'm going to open up another chart that actually has a completely different bias on every time frame. It's Euro AUD. Wait, is it? Euro AUD. Is this making sense? Anyone? Am I making sense? Are you guys following? My computer's a little bit slow right now. And check for engulfing candles. Yes. Is everyone following? Is everyone following? I would assume so. Got no messages in chat. Okay, cool. So what I'm going to do here, I'm going to remove this. And I want to actually go to the 1 hour here. Would you look for longs or shorts in this market if I just show you this? Don't ignore this over here where I have a trade set up over here. But what you see over here, would you look for longs or shorts? This is kind of a double top over here. When we drop the zone. Longs or shorts? Come on. We need active people here. Skinny says long. Anthony says short. Okay, valid. So like the thing is, there's no right or wrong answer. It's like it's honestly just what you see in the market. But something I want to show you here is that the market looks like this, right? If I show you this, the market has one bias. Right, if I go to the 4 hour, the market has another bias. Right, I go to the daily, market has a completely different bias then. Do you see how every time I'm zooming out, you're not just getting more information, but you're seeing where price is actually going, right? If I if I showed you one time frame, for example, I showed you the 1 hour, and I show you this, you're so limited to the information you have, right? You don't know where prices come from, right? So in this example here, your prices come from down here. It's making high highs, cleared out liquidity, tapped into a weekly zone, right? You have a 1 week zone over here, right? After the market's continuously making lower lows, right? So the bias is short, right? I sent a screenshot of one of my charts to one of my mentors, and he was like, "Yo, dude, you're looking for shorts in the market that wants to go long." And I was like, "No, dude, look at the weekly. Like the weekly time frame gives you a completely different bias. Like look at this to what the daily or what the 4 hour gives you." Okay, it's important to understand these things, right? Like for example, right now, what would I want to do is I wouldn't take a trade off of any of these zones over here. It's just because you've got this chart in a position where you have reason for it to go up. There's equal highs over there. You have imbalance over here. You have a fair value gap over here on the 1 hour. Right, sorry, that's not a fair value gap. This is fair value gap over there. You've got a fair value gap over here. You've got loads of reason for this market to actually then go up to take out all those positions. And it puts you in a position where you're kind of like, I want to look for a short, but you've got these equal highs over here, right? A lot of times people would then grab their fib top to bottom of this move, and then they would take a short off of their golden zone, right? Because what you see here is you see a move to the downside. You see a change of character to the downside off of that level there. People would then go in on the 4 hour time frame, mark off like a zone like this, right? And they would wait for this zone to get tapped and then kind of ride the market to the downside. But the thing that you're missing in this example here is that you're missing the market left equal highs. Right? The market left these equal highs for a reason. It would make sense that you would go up, create equal highs, drop, get people to sell, and then reverse price, take those people out of the market, and then shoot it down, right? Because what you're looking at here is you're kind of looking at a range, right? Looking at this is the range low, this is almost the range high, and this is like a clear of the range high, right? It would make sense for us to then grab the equal highs out, clear it out completely, tap into this upper zone, and then drop it, right? It's all about understanding that, like on the 4 hour, you've got this massive imbalance here. Right? On the 4 hour, yes, you need to go and take out this low because that's essentially the target. But you have not yet cleared out these levels over here. These levels over here. You haven't mitigated these sellers. These sellers are still waiting, right? There's probably so many orders waiting to get triggered in this zone up top here alone, right? So why would the market makers leave that out when they know that so many people went short off of this double top, right? So now this is where it gets a bit interesting, is that I wouldn't look for a long to then short, because I don't know what the market makers want to do in this situation here, right? Because this chart was drawn up on the 4 hour, like this exact setup over here was drawn up on the 4 hour, I can't look for a long, because what if they want to push price up to the fair value gap, send it down, and then send it up again, right? Because there's no real bias under that, right? You've got to wait for that zone up top to get tapped and then send it down, right? So I'm going to go through to oil, US oil. Just want to show you guys something cool here. Is that you've got the market in the same situation over here as where you've got this market bouncing off of demand, creating a higher high over there, creating a breaker structure over there. Let me move this out the way. Creating a breaker structure, creating a target breaker structure there that we did actually then end up hitting, because that was my target last week, which then now turns into a breaker structure to the upside. But the thing that is interesting here is that you've built up all of this liquidity while trying to set up all these targets over here, while trying to break structure to the upside. The market ended up building up all this liquidity and eventually takes that liquidity to the downside, right? So now, once again, people would then go and say, oh, the market made a lower low. That would be my change of character. Once again, drawing their fib top to bottom, trying to look for a selling zone, right? Even if they didn't draw a fib, they just would have marked off probably this zone up top here. And you can see how price absolutely shreds that one time straight through, just shreds that zone, right? Because people neglect the fact that liquidity buildup is the feature of you building liquidity is you will then eventually take one side of the liquidity. Once you have that side, you'll then continue in the direction you were moving in originally, right? You'll see that the market often builds liquidity in the opposite direction to what the move is, right? So if the move is up, liquidity gets built to the downside and then drops liquidity, gets back into the same zone, and then pushes to the upside again, right? So how can we get around this? Like, how could you have known that this market was going to go back up? Simply by zooming out. Simply by zooming out. Go to the weekly, go to the daily, go to the 3 daily. If I go to the daily time frame here, you can see that liquidity drop to the downside, all it was is just a retest of a zone, most likely, right? If I show you to you like this, right, you can see over here as well, liquidity build up. You drop that zone, grab the liquidity, start moving up again, make a higher high, come back down. We're currently kind of forming a bit of a range here, but it's important to understand that the momentum of the market that you're trying to trade on each time frame is going to be different, right? If I go to the 5-minute time frame right here, looks completely different to what the 4-hour gives me. Right, the same thing goes for every single chart you're trying to trade. Just go and grab something like Euro USD on the 5-minute. 5-minute time frame, Euro USD, downtrending, right? Making lower lows. Market's making lower lows over here, right? 10-minute time frame, still making lower lows. 30-minute time frame. All of a sudden, the 30-minute time frame looks completely different to the 5-minute time frame. You're now uptrending on the 30-minute time frame. 1 hour, still uptrend. 4 hour, 4 hours now downtrending. Daily, daily's uptrending. 3 daily, 3 daily is uptrending. Right? Do you see how these biases are completely different for each time frame you're trading? And by neglecting one time frame, or by only trading on one time frame, you're leaving out so many things to just an absolute guess, right? So for example, here, right, on the 4 hour on Euro USD, could mark off this zone as my demand, right? But if I go to the daily, what's the validity of that zone actually holding? This chart, I know I can see over here has built up liquidity over there. There's liquidity sitting there. There's liquidity sitting here. Liquidity sitting here. And it's left that liquidity all behind that it eventually has to then come and take. Right, so going back to the 4 hour, you might look for longs here. But is it valid? Right? Is it important to understand that these longs might not hold? Right? When these longs don't hold and you get upset that your zones are failing, you've got to understand why. Is that on the 1 hour you might be trading an uptrend, but on the daily you might be trading a downtrend. Right? Does this all make sense to you guys? Is everything I'm saying making some sort of sense? super sense. Cool. Right? So a lot of the times what people are doing wrong, right? So like, for example, Ronaldo has been sending me a lot of charts in my private DMs saying, hey dude, look at this chart in the 1 hour. Look at this chart in the 30 minute. Look at this chart in the 15 minutes. Right? And I'm like, and as soon as he sends me the chart, I look at it on the 15 minutes or whatever time frame he tells me to look at it on. And I check the zone that he has. But then as soon as I go to like the 4 hour, it's got a completely different bias. The guy's trying to look for a long when the market's actually downtrending. Right? He sees a 1 hour change of character, which was actually a liquidity grab. He sees a 15-minute area of liquidity that gets taken, but the market's actually going to continue in that direction because that's the direction of the bias, right? So one thing I can tell you guys to do in these examples is when you're trying to trade a chart, right? Let's take Bitcoin, for example. Let's actually not take this chart. Let's take this one. Okay, Bitcoin, for example, right? 4 hour time frame looks completely different to the daily. The second you start zooming out, you can start seeing where prices come from and where prices wants to go almost. Right. So in this example here, I haven't been trading Bitcoin because it's just been ranging. But the 4 hour time frame is completely different to the 5 minute. Right. Like it's very important to understand like the differences between the time frames and where to look at things, right? So like for example, when you're charting a chart, like if I grab let me go back to my Forex charts. If I grab gold, okay? If I grab gold, let's go to the 5 minutes because I actually see something here. Alright, if I grab gold here, boom, change of character. Area of demand that caused that change of character was there. People would then look to go long off of this area of demand here because this is exactly what the smart money, like this is kind of perfect, right? Smart money concept teaches you change of character. Well, there was a breaker structure here, so the market's moving down over here. You then flip and you start moving to the upside. You then come down into this area of demand and then you bounce to the upside. Great, that's a good setup. Go to the 30 minutes. Go to the 1 hour. Go to the 4 hour. Go to the daily. Does this market still look like it wants to go up on the daily? Go to the 3 daily. Does the market still look like it wants to go up on the 3 daily? Let me delete all this stuff. Right, it doesn't look so great on the 3 daily, right? Go to the daily again. Look at the daily candle. Where are we? What are we doing? What area of demand could we be bouncing off on the daily, right? So do you see how just zooming out into the daily gives you a completely different bias, right? So for example, here now, I would mark that off as liquidity to the upside. And now you're kind of sitting in a position where you've got this as resistance. Right, so it would make sense that this chart could maybe go up to here and then come down. But do you see how all of a sudden these zones just don't make any sense when you're trading on like the 5 minute, for example? And completely neglecting the 4 hour. Completely neglecting the 1 hour. Right, it's important to have these things under controls because as a trader, specifically a smart money concept trader, you're not only trading zones of areas of supply and demand, you're trading areas of liquidity, areas of imbalance, right? It's important to have all these things going. Greetings everyone, Hartley. I mind looking at your ING, would like your thesis on it. Took a short last night on a 15-minute down. Would like to see you. Give me like, I'll do it after the session. I'm having a hard time hearing Hartley's voice over the music. Is there any way to turn on the music? Yeah, you just click on the bot and then click on the jockey music bot and then just drop the volume. Click the bot, drop the volume. So yeah, is there any questions other than like this, like other than what I'm going over? Is there any questions that you guys have? Anything that I can help you with? with regards to markups and whatnot. My head's kind of all over the place today, so sorry if this session was a little bit kind of sloppy-ish. I'm looking to go long for gold, by the way, if it comes deeper into the zone. The 30-minute zone. It needs to come deeper and needs to come like down here. Then I'll go long. Click the bar, drop the volume is a good lyric. You just made all my questions disappear. It all makes sense now. Penny drop type of shite. Yeah. Like specifically, like for example, like Vicky, right? I don't know if you've been to Thomas's sessions, but Thomas likes to trade SMC on the 1 minute, right? And he makes it look pretty simple, where you're trading SMC on the 1 minute is kind of like, by doing that in his sessions, he makes it seem like you can trade SMC on the 1 minute, and you very well can, but you have to have a higher time frame bias first. You have to understand where the market is coming from. You have to know, for example, you have to know what the daily candle looks like on a chart. Like for example on gold, like the daily candle looks like this. Right? Understanding how this daily candle looks, I can decide, can we flip and go up, or is it more likely that we're going to push down? Right? Understanding what the higher time frame candles look like for example here, that 4-hour candle over there, that pin bar, what does that mean? Right? You understand? Does that make sense? I hope it does. I hope I'm making sense. Yeah, it's very easy to get lost in the 1 minute. Daily bias and time then price. Yeah, it's literally it. It's understanding where the market can move to in a day, and then you can trade it on like the lower time frames. Right, that's why I don't really like trading on Mondays. It's because the market normally manipulates into the wrong direction on Mondays. They try to manipulate price and get the bias in the wrong direction, and then on the next day they'll then send the price in the direction they want to send it in. Right. Let me go back here. Right. Where will there be a recording of the session? Yes, there will be. Uploaded later. You want me to look at Inch USDT? Let's check it out. Oh, this music is so calm. So calm. Inch. Where would that be? There it is. Let's mark this up. Let's mark this up. That's my views for Inch. Kind of, that's my views on Inch. Got this bottom zone here. This is daily zone. Yeah, it's daily zone. So yeah. Yeah. Anything else? Any other questions that anyone might have? Anything you want me to look at? Anything else? No one? Render. Yeah, render's like... I wouldn't do anything right now on render. Just because that daily kind of looks like it wants to keep going up. But if you go to the 4 hour, this looks like a range. Holding liquidity to the downside. Yeah. Render's like in a tricky situation. I wouldn't take a short or a long on render right now. Only longing zone I would go for is on the daily down here. That's what I would look for. So yeah, I'm gonna start the recording real quick.